Hello, and welcome to the Mr. Suw Crypto podcast, a casual but serious conversation about the crypto world. Here we discuss the world of digital assets, blockchain technology, and everything that can make you better understand and more prepared for the new financial era. In this episode, we tackle a classic but crucial question. How do I understand Bitcoin better? I understand that many of you are new to Bitcoin this year and immediately thought, wow, it's too late. Everyone else is already rich. But calm down, bro. Calm down, sis. In the crypto world, the late ones are not the ones who just started, but the ones who didn't learn before they started. Bitcoin is not just a matter of buying at low prices, selling at high prices. It has a history, it has a vision, and it has a system that is completely different from the traditional financial system. In this episode, I'll take you on a dive together. I'll cover 4 chapters for those of you who want more than just following along. Starting from how to follow daily news, read charts, review white papers, to understand on-chain data. Get your coffee ready, lie down, and listen to the end. Because after this, I'm sure, you not only understand Bitcoin, but also understand why you should understand Bitcoin. Chapter 1. Understanding Bitcoin equals understanding the news. Let's move on, guys. Now, let's talk about something important that beginners often underestimate. If you want to understand Bitcoin as a whole, you can't just look at the price. You have to understand its pulse. And one of the best ways to follow the heartbeat of the crypto market is through news. Yep, news. Many people think Bitcoin is just like technology. But wrong. Bitcoin is alive. It reacts to the world around it. The global economy, government policies, institutional adoption, even technology updates. Everything has an influence. For example, if the Fed raises interest rates, investors become afraid to take risks. The stock market goes down, crypto can also go down. Conversely, when there's good news like a Bitcoin ETF being approved, the market gets excited. That's not a coincidence. It's a natural reaction. Bitcoin is also often linked to inflation. If the dollar loses purchasing power, investors look for alternatives to maintain value. One of them is Bitcoin. But remember, this is not a guarantee of rising prices. Yes. Sometimes it goes up, sometimes it goes sideways. But it's still important to understand. Moving on to the topic of regulation. Regulation can make the market happy or panic. For example, when the SEC sued Binance, many sold in panic. But when the Bitcoin ETF was approved in early 2024, the market immediately exploded. So, regulation has a huge influence. Then, we can't forget the role of large institutions, like BlackRock, MicroStrategy, and Tesla. If they buy Bitcoin, it means they believe. And other investors come in. That's a domino effect that can't be ignored. Now it's about technology. Every upgrade on the Bitcoin network, such as Taproot or Lightning Network, has a long-term effect, not just for developers, but also for general adoption. The more efficient it is, the more people will want to use it. And that can affect the price too. So to put it simply, news is not just passing info. It's a reflection of 4 major forces. 1. The global economy. 2. Regulation. 3. Big institutions. 4. Technology. Those 4 are the cogs that drive the price of Bitcoin. The question is, how do you read the news correctly? First, don't just swallow the headlines. There are many crypto media that are exaggerated. Look for credible sources, like CoinDesk, Cointelegraph, or Decrypt. If possible, read more than one source. Check the sources. See the context. If there is news, Bitcoin fell 10%, don't immediately panic. Ask first, has this ever happened before? Is the impact short or long term? If you're serious, you can also use data from platforms like Glassnode or Messari. There, you can see deeper data, like the flow of funds, whale wallets, and more. It's not mandatory, but it's a big plus for those of you who want to be informed investors. Then, don't forget the role of the outside world. Policies from America, Europe, Japan, all have an influence. If America says crypto is legal, the market is happy. If they are strict, the market can be read immediately. Then, the dollar exchange rate is also important. If the dollar is strong, Bitcoin usually weakens somewhat. But if the dollar weakens, Bitcoin can be an attractive alternative. Want to be more accurate? Monitor the DXY, which is the dollar strength index. Up equals pressure for crypto. Down equals opportunity to go up. And finally, watch out for FUD. Fear. Uncertainty. Doubt. Negative news can be a tactic to lower the price. Don't believe it right away. Get the facts first. Differentiate between news, opinion, and rumor. Conclusion. If you want to understand Bitcoin, you can't ignore the news. Because news is part of the market. And the market is where your money works. So, learning to read the news is an investment too. Not just to understand, but to make smarter decisions. Okay, that's the first chapter. Let's move on to the next chapter. Chapter 2. Reading charts is like reading the market's mind. In this episode, we're going to talk about one very important skill, one that is often underestimated, but can be the difference between a sloppy trader and a trader who is sharp as a sniper. Its name? The language of the market. Alias, chart reading. But relax, this is not a heavy math session. We're talking coffee shop style, not a hotel seminar. Think about it this way. A graph is not just a weird picture full of lines and red and green candles. They're like global conversations 24/7 between millions of traders around the world. Every candlestick is like a word. A volume spike? That's like a shout. And a resistance breakout? It's like everyone is saying, let's go low. If you understand the language, you understand what the market means. Why should you be able to read charts? Here's the logic. 1. It's a mirror of mass psychology. Support broken? That means the majority is afraid. Resistance broken? Euphoria explodes. And we, as traders, can cheat the collective emotions of the market through the chart. 2. Supply versus demand 24/7. The market is all about who buys, who sells, and who has more intention. The chart tells you where the buyers are strong, where sellers are starting to panic, and when they're both just sitting tight, aka consolidating. 3. Patterns that repeat over and over again. Head and shoulders, double bottom, triangle. It's like a Korean drama, different actors, but similar storylines. We can learn to see the pattern and get ready before the next scene starts. 4. Technical analysis equals your trading GPS. Shows you where to enter, where's the take profit, where do you put your stop loss, how big is a safe position. Mandatory tools, TradingView. If you're still relying on screenshots from Twitter to take positions, please upgrade a bit. Use TradingView. It's free too, really. Why? Because it takes data from multiple exchanges, so your view is unbiased. You can see charts from all time frames. What is a time frame? Here's what it is. Monthly and weekly equals world map. See long-term trends. 4-hour and 1-hour equals city map. Great for finding buy-sell areas. 15-minute and 5-minute equals ultra zoom. Suitable for scalping, but be careful, there is a lot of noise. The key, start from big to small. Don't get it backwards, bro. Don't make long-term decisions just because the 5-minute RSI is oversold. Speaking of RSI, let's get acquainted with technical weapons. Support and resistance. It's like a wall that's hard to break through. If broken, it's usually an important turning point. Remember, what was once support can become new resistance if broken. This is a dynamic you should take note of. Moving average, MA, like a wind direction indicator. MA 50 equals medium trend. MA 200 equals long trend. If MA 50 cuts above MA 200, that's called a golden cross, and it's usually a bullish signal. Volume. This is the gasoline. Price movement without volume is like a car running out of gas. Breakout but small volume? Be careful, it could be a fake out. RSI and MACD. This is like a thermometer to measure market emotions. RSI above 70 equals potential overbought. Below 30 equals oversold. But remember, in a strong trend, it can be overbought/oversold for a long time. MACD. Look at the line and the histogram. If MACD cuts the signal line from bottom to top equals upside potential, and vice versa. Last and most important, journaling. This is the key to everything. Analysis can be sophisticated, but if it's not recorded, it's just passing through your head. Try to start taking notes. Dates and market conditions. Your analysis before taking the position. Why did you take the position? What was the end result? And most importantly, what can you learn? Journaling makes you grow. It makes you honest with yourself. And slowly, you'll be able to read the market with intuition, not just memorization. In conclusion, trading is a skill. Chart reading is a language. Journaling is a mental exercise. Put it all together, and you're not just following the market. You can talk to the market. Sometimes you can even guess the moves before they happen. So from now on, open the chart, listen to the beat, note the reaction, repeat, until one day, you not only understand charts, but also understand yourself as a trader. Before we move on to Chapter 3, if you feel like you learned something today, share it with your friends and family. And don't forget, trading is not just about making money. It's about getting sharper every day. Okay, we continue. Chapter 3. How to dive into the Bitcoin white paper without drowning. In this third chapter, we'll dive into the Bitcoin white paper. Yes, the legendary 9-page document that has kept banks and politicians up at night since 2009. But don't worry, our goal is not to become Satoshi overnight. We're here to understand how to dive into the white paper practically, without having to study cryptography first. Let's hit the gas. 1. Read directly from the original source. The first step is simple. Read the white paper directly. Just type in Google, Bitcoin white paper PDF. The file is free and easy to find. I know, when you first open it, it might look like a scientific paper from an alien world. There are strange terms like hash, Merkle tree, proof of work. But remember, your first goal is not to understand all the techniques, but to grasp the big idea first. My tip? Read it twice. First, to get an overview. Second, you'll glance at the parts that make your eyebrows go up. Mark and take notes. Use a highlighter or digital notes. Sometimes one paragraph can be a week's worth of reflection. Seriously. 2. Focus on key concepts. Now let's talk about which parts you must understand, even if you don't understand the code. First, the Byzantine general's problem. Let's put it this way. Imagine you and your friends are coordinating an attack, but don't trust each other, and have to communicate through smoke signals that sometimes break. Well, you must still be able to make decisions together. In Bitcoin, this problem is solved through the blockchain and proof of work. So all nodes can agree on which transactions are valid, without the need for a referee or central bank. Second, peer-to-peer electronic cash. This is the core of Satoshi's vision. Bitcoin is not a decentralized PayPal, but a digital money system that you can send directly to anyone without a bank. How cool is that? You have full control over your money. No one can block or freeze it. Third, decentralization and immutability. Once a transaction enters the blockchain and is confirmed, it cannot be changed or deleted. This is not a sweet promise, but it's by design. You can't fool the network because everyone has a copy. Fourth, limited supply, 21 million only. This is what makes Bitcoin different from fiat. The total number of Bitcoins that can exist is only 21 million, period. It cannot be printed at will like dollars or other fiat money. And this makes Bitcoin have a scarcity value, like a digital version of gold, but can be sent via the internet. 3. Use AI and additional resources. Now, if you're stuck on technical terms, don't panic. Use AI like ChatGPT, DeepSeek, or other tools. Just ask a simple question. Explain what a Merkle tree is like I'm in middle school. Seriously, don't be shy. Everyone starts out confused. Check YouTube for explanation videos. But make sure the ones you watch are from trusted channels. Or go to bitcoin.org. Lots of beginner-friendly explanations there. Discussions with the community are also fun. On Reddit, Telegram, or if necessary, organize a review with white paper session with your friends. Here's the thing, guys. You don't have to understand all the formulas to understand why airplanes fly. But if you understand the principles of aerodynamics, you will have more respect for the pilots and engineers behind the scenes. It's the same with Bitcoin. Reading the white paper is not for style, but to capture the soul. You won't be easily carried away by FOMO or FUD, because you know where Bitcoin came from and why it was designed that way. So, don't be afraid to open the white paper. You don't need to be Satoshi, just an informed and aware user. That's it for the third chapter. In the next chapter, we will discuss data on-chain. Stay tuned and don't forget, understanding white papers is an intellectual investment, not a burden. Okay, let's move on to Chapter 4, Bitcoin on-chain data disclosure. In this fourth chapter, we talk about analyzing Bitcoin on-chain data. But calm down, take it easy. It won't be complicated. I will discuss it like chatting in a coffee shop, but using Wall Street class data. Let's go? 1. What the heck is on-chain data? Okay, first of all, maybe you're thinking, what is on-chain? Let's put it this way. On-chain data is any activity that happens directly on the blockchain. Transactions, wallet addresses, The number of Bitcoins that change hands, all recorded, transparent, and accessible to anyone. Literally like CCTV, but for digital money. Contrast this with off-chain data, which is stored on exchanges or DeFi platforms. On-chain is purely from the blockchain. No trickery. 2. Why should we care about on-chain data? Good question. You can look at candlestick charts for 24 hours, but sometimes it's like guessing the direction of the wind. Now, on-chain data is like you're peeking at insider movements. You can see who's selling, who's accumulating, how much BTC is sitting on the exchange, and that gives you a big clue about the direction of the market. So, it's not just chart up green, chart down red. It's deeper. 3. On-chain indicators you must know. Now, let's get to the juicy part. I'll give you important indicators in the on-chain data that can help you make more sane and hopefully more profitable decisions. Exchange net flow. This is simple. If a lot of Bitcoin goes to the exchange, it's usually a signal that people want to sell. Conversely, if Bitcoin leaves the exchange and goes into a private wallet, usually it's a sign that people want to keep it, aka HODL. Think about it. You put money in your personal wallet to save, right? It's the same with BTC. This data gives us a feeling of the direction of selling or buying pressure. Active addresses and new addresses. Imagine you're selling coffee. If more and more people stop by your shop, it means that demand is increasing. Well, active addresses are like the number of people who are transacting on the blockchain. If it goes up, it means there's high activity. It could be bullish. If it goes down, yes, it could be that the market is lazy again. MVRV ratio, market value to realized value. Okay, this is a bit technical but important. MVRV is like you're calculating. Are these people actually profitable? If the MVRV ratio is high, it means that the majority of holders are making huge profits, and they might start thinking about taking profits. If it's low, it means a lot of people are stuck, and the market is already undervalued. A good time to buy? Maybe. Realized cap versus market cap. Market cap you already know. But realized cap is the total value of BTC based on the price when it last changed hands. If realized cap goes up, it means a lot of accumulation. If it goes down, it could be a panic sell. Combine these two, you can see if the market is healthy or weak. Whale activity. Hey whales, if there are super large wallets moving, we should be suspicious. Either they're ready to dump or they're buying. Whale activity is like a big boss move in the market. And yes, they often trigger FOMO or panic. That's why it's really important to monitor. 4. Free tools to check on-chain data. I know, many of us are not ready to subscribe to premium platforms like Glassnode or CryptoQuant. But don't worry, there are still free tools available. Look into Bitcoin, free and easy to understand. 2. CryptoQuant, freemium, can access some important data like exchange inflow. Dune Analytics. This is a bit technical, but lots of cool dashboards made by the community. Messari.io has insights and news too, great for research. 5. When will on-chain data become relevant? Answer: not every day. On-chain data is most useful during big moments. During a bull run. When BTC breaks down. When there is massive accumulation. Or when you're confused basically sideways, but volume isn't moving. So this is not a daily guessing tool. It's a tool to get the big picture. 6. Conclusion, so you don't just FOMO. Okay, let's summarize. On-chain data is important to understand market movements from the inside. There are many indicators that can help you make more rational decisions. You can use free tools to start learning. Don't just look at the chart, also look at who is playing behind the scenes. Remember, crypto is not just about the current price. It's about narrative, momentum, and market psychology. And on-chain data helps us open our eyes wider. Chapter bonus. Security is sovereignty. Become your own Bitcoin banker and guardian. Okay, right away. Not your keys, not your coins. The holy grail of the Bitcoin world. Ever heard of this phrase? Not your keys, not your coins. It's a short sentence, but the impact is profound. It's not just about the technicalities of digital wallets. It's a philosophy of life. It's about absolute financial sovereignty. About you no longer being a bank customer, but a bank yourself. Why can't this be underestimated? Imagine you have your money in the bank. Seems safe, right? But what if the bank goes bankrupt? If your account is frozen unilaterally? If the government intervenes? In the traditional system, your money is really just a promise. I owe you. I owe you. Alias, they promise to return your money if everything goes well. Well, Bitcoin comes with a new paradigm. If you have the private key, it's really yours. Immediately. Final. Indisputable. What does your keys mean? Okay, let's be clear. A private key is simply a super secret password. But it's not just a login password, it's a mathematical key that proves that the Bitcoin address belongs to you. And herein lies the danger. If you store Bitcoin on exchanges like Binance, Coinbase, and the like, it's not you who holds the private key, but the exchange. What does that mean? Technically, it's not your Bitcoin. You just expect them to be honest and financially sound. If you're serious, you should use Cold Wallet. Okay, now we're getting into the technical stuff that's easy to understand, but many are too lazy to learn. Cold Wallet, alias hardware wallet. Can you imagine? A physical wallet, but the contents are not money, but direct access to your Bitcoin. For example, Ledger Nano, Trezor, Blockstream Jade. Its main function? Keep your private keys offline. Alias, can't be hacked, can't be intercepted. Unless the thieves manage to steal your physical wallet plus know your PIN plus have the seed phrase. Pretty complicated, right? It's not a cost, it's an investment. The price of hardware wallets can start from tens of dollars. But compare that to the risk of losing all your Bitcoins just because you clicked on a phishing link. Digital vault, bro. Don't be stingy with your own future. Custodial versus non-custodial. This is a must understand. Many people are still confused. My wallet is safe. I can open the app anytime. Yup, you can. But it's a custodial wallet. What does that mean? You don't have the private keys. Your access can be blocked at any time. If the exchange is hacked, it could vanish. Solution? Move to a non-custodial wallet. That means you're in control. You have the keys. You are also 100% responsible. Seed phrase, the only ticket home. Okay, this is the most serious part. When you create a non-custodial wallet, you're given a seed phrase, 12 to 24 random words. These aren't just any words. It's the master key to all your Bitcoins. If you lose it, game over. If someone else sees it, game over too. The best way, write it down on paper. Keep it in a safe place. Never in the cloud, phone gallery, or email. Even better, use a metal plate, steel backup. Waterproof, fireproof, rat-proof. Privacy? Blockchain is totally transparent. Many people misunderstand. Bitcoin is anonymous. In fact, not really. All Bitcoin transactions are always recorded on the public blockchain. Anyone can see your balance and transaction history from your address. But your personal identity is not immediately visible unless you tell them yourself. Tips for maintaining privacy. Use a new address for every transaction. Don't post your primary address on social media. Use Layer 2 like Lightning Network for more private transactions. Conclusion: don't just be an owner, be a guardian. In the fiat world, we are taught to trust third parties. But in the world of Bitcoin, trust is replaced with verification. Bitcoin gives you freedom, but also responsibility. And if you already understand all this, congratulations. You've leveled up. You're not just another hodler. You've become the guardian of your own financial sovereignty. Shield real steps today. If you're still holding Bitcoin on an exchange, stop first. Take a breath. Evaluate. And try these steps. 1. Buy a hardware wallet from an authorized source. 2. Transfer Bitcoins to that wallet. 3. Write the seed phrase by hand. Keep it super safe. 4. If possible, make a steel backup. 5. Keep the seed phrase secret as if your life depended on it. Don't rush to profit. Take time to learn. Because your confidence in the stormy market later does not come from predictions, but from understanding. And now you already have that foundation. See you in the next episode. Stay safe, stay wise, and stay the guardian of your own treasure. Greetings from Mr. Suw Crypto. Okay, before we end, don't forget our golden rules. 5 important rules of Mr. Suw Crypto. First, don't use hot money. Use extra or idle money. Do not use money for daily needs or money that will be used in the near future. Second, don't over-leverage. Risk what you can afford to lose if you trade derivatives, futures. Always use a stop loss because the crypto market is very volatile. Third, 70 Bitcoin 30 altcoin. Always allocate more in Bitcoin because Bitcoin is the parent of crypto. By allocating more in Bitcoin, your portfolio will be safer when the market does not meet expectations. Fourth, Always stay cash. Always stay in cash 10 to 20 to buy when the market discounts or drops significantly. Then you can sell when the price has risen, so that you still have cash for the next discount. Fifth, think long-term. Investing is not about 1 or 2 days to get rich. So think long-term and minimize the risks that might make your money disappear. Everything takes time. Remember, Warren Buffett didn't build his fortune overnight. If you find this video useful, help us to continue to make videos like this by clicking subscribe and share with your family and friends. Don't forget to let us know in the comments column if there is anything you have questions about, because your comments mean a lot to build this channel. See you soon, and don't forget, HODL knowledge and mindset first, then HODL assets.